What if your savings could grow at one of the highest rates in the market, all while avoiding monthly fees and complicated requirements? That's exactly what Bread Financial's high-yield savings account promises. But is it really the best place to park your hard-earned money, or are there some trade-offs you should know about? Today, we're diving deep into the pros and cons of Bread Financial's high-yield savings account to help you decide if it's the right fit for your financial goals. Let's start with some context. Bread Financial, formerly known as Comenity Direct, has been gaining attention for its tech-forward approach to banking and its competitive savings products. Its high-yield savings account is designed to help savers earn significantly more than they would with traditional banks. But like any financial product, there are benefits and drawbacks to consider. Pros of Bread Financial high-yield savings. Top-tier interest rate. One of the standout features of Bread Financial's high-yield savings account is its APY of 5.1%. This rate is far above the national average for savings accounts and allows your money to grow faster over time. Whether you're saving for a big purchase or just building an emergency fund, this kind of return can make a significant difference. No monthly fees. Bread Financial eliminates many of the fees that traditional banks often charge. There are no monthly maintenance fees, no fees for ACH transfers, and no hidden costs that could eat into your earnings. This fee-free structure ensures that every dollar you save stays in your account. Low minimum deposit. You can open a Bread Financial high-yield savings account with as little as $100, making it accessible for savers at all levels. There's also no minimum balance requirement to maintain the account or earn interest, so you don't have to worry about penalties if your balance dips. Daily compounding interest. Interest on your balance is compounded daily and credited monthly. This means your money grows faster because you're earning interest not just on your principal, but also on previously earned interest. FDIC insurance. Like most reputable banks, Bread Financial is FDIC insured. This means your deposits are protected up to $250,000 per depositor, or $500,000 for joint accounts, providing peace of mind that your money is safe even in worst-case scenarios. Mobile check deposits. The Bread Savings mobile app allows you to deposit checks directly into your account using mobile check capture. This feature adds convenience for those who still receive physical checks but prefer a digital banking experience. Recognized for excellence. Bread Financial has earned accolades from organizations like Geo Banking Rates and Money.com for its high-yield savings account, highlighting its commitment to delivering value and convenience to customers. Large deposit limits. If you're a high-net-worth individual or someone looking to deposit a substantial amount of money, Bread Financial allows deposits up to $1 million per account and $10 million per customer. Cons of Bread Financial high-yield savings. No ATM or debit card access. Unlike some other savings accounts, Bread Financial does not offer an ATM or debit card for direct access to cash. To withdraw funds, you'll need to transfer money to a linked external bank account first, a process that can take time depending on your bank. Outgoing wire transfer fees. While most transactions are fee-free, outgoing wire transfers cost $25 each. If you frequently need to send money via wire transfer, these fees can add up quickly. No physical branches. As an online-only bank, Bread Financial doesn't have any physical branches where you can handle transactions in person. This might be a drawback if you prefer face-to-face interactions or need in-person banking services. Limited account options. Bread Financial focuses solely on high-yield savings accounts and certificates of deposit, CDs. It doesn't offer checking accounts or other financial products like credit cards or loans under the same platform, which means you'll need another bank for everyday transactions. Withdrawal limitations. Like most savings accounts, Bread Financial enforces federal regulations that limit certain types of withdrawals to 6 per month. Exceeding this limit could result in penalties or even account closure. No automatic rate adjustments. While the APY is highly competitive now, it's not guaranteed to remain the highest in the market indefinitely. If other banks begin offering better rates, Bread Financial won't automatically adjust your rate. You'll need to monitor the market yourself. Paper statement fees. If you prefer receiving paper statements instead of digital ones, be prepared to pay $5 per statement request. A small fee, but worth noting if paper records are important to you. Transfer delays. Transferring funds between Bread Financial and an external bank can take several business days, depending on processing times. This delay might not be ideal if you need immediate access to your money in an emergency. Who is Bread Financial High Yield Savings best for? Bread Financial's High Yield Savings account is an excellent choice for individuals who want one of the highest APYs available in today's market. Bread Financial's High Yield Savings account offers a compelling combination of top-tier interest rates and a fee-free structure, making it one of the best options available for growing your savings online. However, like any financial product, it has limitations such as no ATM access and transfer delays that may not suit everyone's needs. So now that we've laid out both sides, is Bread Financial's High Yield Savings account right for you? Let us know what you think in the comments below. With that said, thanks for watching, and until next time, star.